Good morning, everybody. If y'all got anybody that likes to watch live streams, definitely do me a favor and send this link out. And don't forget to obviously like the video and subscribe if you get some value today. We have much to discuss. All right. Hope you guys have had a good week so far. All right, so as we do every single live call, we're going to start with the news outline. All right, so we see that there's a G20 meeting. I have two red folders. Unemployment claims, for the record, is one of my favorite to trade because it gives you just enough volatility for the most part. And yeah, right? Something you can go do a little study on. Eventually, you'll figure out which news events you like to participate in. Some of it's going to be personal. But then again, there's also some like FOMC, NFP, the heavy news events that have their own particular characteristics. And if you eventually do want to trade those at some point, obviously you're going to want to know what to look out for. But you don't even have to trade any of those crazy news events and still have a wonderful, exciting career. All right, but yeah, so 5:30, there's going to be a lot of volatility that hits the market. So we're going to anticipate, possibly waiting for something around that time. Not at exactly 5:30. You want to potentially wait for 5:50 to 6:10 because that's a macro. That's the very first AM session macro that occurs. That's the pre-market macro. And then, from 6:50 to 7:10, 7:50 to 8:10, 8:50 to 9:10. Then that's the lunch hour. Then after the lunch hour, you go all the way till the last hour of trading. And the last hour itself is a macro, right? Generally, that pushes price against the overall daily range delivery, especially if we hit a higher time frame PD array or snag some full of liquidity, right? So yeah, we can get into that a little bit later. But yeah, so this is our outline for today for the morning. So 5:30, there's going to be a ton of volatility. All right, so then obviously the next step, as always, we go to the bonds and yields. One thing that is striking me as kind of fishy and odd is the fact that bonds are basically jumping higher right now. We did assume that bonds had a potential to want to run up and maybe attempt to take these highs. And I believe there's a fair value gap also, on this one, on the 30-year. Bonds that hasn't been fulfilled. You can see that it's been pretty messy as well, right? It's been up, down, on its way to eventually attacking this, right? This, in an ideal scenario, would promote bullish indices. Obviously, because of the tech issues and something related to trade with China in terms of the chip supply chains and the adjustments, I guess the U.S. is trying to, the U.S. companies are trying to move towards, has kind of sent a shockwave. Obviously, things happen. I got another thing that we're going to discuss, which I mentioned earlier before I hopped on my social medias, related to seasonality. And if you aren't familiar with seasonality, or even if you are familiar, this is going to be a very enlightening moment for you guys to see if you haven't ever seen things in play actually impact the market. Okay, so if we go to... Okay, I'm going to hurry and do this real quick because we got a couple minutes. So if we go to here in my private community, we can see how, wait till it gets to July, the specific day. Okay, so July 25th, you can see what's happening here translating to the actual chart given the time of year. Right, it has like a slower period. Price has been raging higher, right, which is all seasonal influence, which we also discussed. Once we went into June, we discussed and pointed out the fact in my private community about the seasonal tendency being bullish, and we were able to trust it being bullish continuously, along with other factors we also have discussed, I believe, here on this channel as well. But now we're at a time when things could potentially start to change, right? At least for a short amount of time, right? So if we continue to play it all through August, you can see the difference, right? You can see all of the bearish sentiment as well as the kind of, consolidated sentiment as well. August is one of those months where you have to be very, very cautious. This is also mentioned by ICT. He has pointed out different segments or different months in the year that do have a high probability of being choppy and a little bit more difficult to read, right? So we're moving into that time period once we hit up into August. Then there's a couple other ones as well. Like pretty much all the times when you see price, like all three of the lines kind of going sideways and not really having like a very obvious agreement, right? Generally those times are a little bit difficult or can promote the idea of more difficult price delivery, right? So just one of those observations fundamentally that can really, really assist you. But yeah, so keeping focus on what we're dealing with right now, you could see how the market and the indices tanked. We've been observing, trying to see reasons for price to further promote the idea that price is going to push lower, and we ended up getting that. Okay, that's also being justified by looking at the seasonal chart here. As you can see, all three, well, at least two of the three, and the two that are confirming this potential bearishness, they agree, but only one isn't, and the one that isn't is the lowest time, the lowest set of data, right, in terms of time, right? It's the pink one, which is 5-year. Okay, this is I don't know why it's cut off on the screen, but this is the NASDAQ seasonal tendency. Okay, I didn't realize that the name was cut off on the top. But yeah, so given the fact that we see this, it kind of helps us reason with potentially understanding why price is doing what it's doing right now across the indices. But not only that, we had an SMT at the highs here. If we flip through if we just move over to here, or if we go to the weekly chart, we could see a clear visual for the SMT. Right, and the new quarter opened on June 16th, which I also mentioned on this call, or not on this call, but on this channel. So we were wanting to look for potential reasons to support bullishness or find reasons to negate that if price was to get down below specific structure, which I've mentioned. Right, now that we have that, right, if you look here as well in this time frame using the 3 PDA rule that I always mention, you can see how this is one PD array, 2 PD arrays being the kind of small order block that should have held being bullish, right? That's what was going to be the case. but it did not. So 1, 2, and now 3 PD arrays have been broken. There was an SMT at the lows for a small bit of time, but now that obviously has been blown through. And this just shows the amazing use and ways that you can reason with a change based on seasonality, right? And then you also couple in the fact that there was a new quarter that we went into after a really bullish couple quarters. So we're due for something like this. Contrary to what the news will be telling you, they'll probably tell you that the whole world's ending and the market's going to go to zero. But yeah, right? So that context is important before we start jumping into deeper analysis for the real-time price delivery going into the 5:30 open and then the 6:30 open. Okay, so with that backdrop, bearish seasonal tendency, now we have a break in market structure, right? We went from stops to stops, so that's a break in market structure on this time frame. If you go down to the lower, daily chart, you can really see multiple things have broken, and this is no longer a bullish market, at least for now, until something changes, right? So now we shift our focus to potential sell side delivery and what we are potentially reaching for. Price did reach through pretty significant liquidity already to the sell side. Really extended yesterday because of, like I mentioned, things going on with China and the supply chains and just different factors with that. In a nutshell, right, you can get into real technical reasons as far as why, but there was bad headlines having to do with the China scenario. And then there's also bearish seasonal tendency that's agreed upon large sample sets of data, which is the 15-year and the, I think, 25 or 28-year data set on the seasonal tendency. Okay, so that has promoted this going lower. Because we have been extremely bearish here and it's dropped so aggressively, and we've went into Thursday, right? We need to observe what price has achieved so far, right? Based on the weekly range, right? We have, and the liquidity, right? So based on the weekly range, we could see that this was a rally up into a bearish breaker, which I had outlined. Price stayed below the midpoint, and then now we've dropped down again. So if price is going to want to continue to be bearish, for us to be able to trust that, given the large range and the concept that ICT teaches in terms of large ranges create small ranges and small ranges create large ranges, and the fact that we've hit a PD array on the higher time frame, right? And it's Thursday. So all those factors in, plus seasonality, like I said, we can reasonably anticipate the fact that if they are going to want to continue to sell, they're not just going to go one-sided forever. I'm expecting something like this to potentially take place, for them to come back up and scoop up some liquidity. If we go to the weekly chart, we also have an inversion fair value gap here as well. So that may be targeted. We've also hit a weekly order block that could promote us potentially getting a bounce inside this now shifted market to the downside. All right. So yeah, I hope that made sense. Made sense of the situation at hand. We could see DXY as well. It came up, hit a fair value gap, kind of retraced. We're now in a indecision scenario. We're also now about to go into the 5:30. So because that's the case, let's go drop down to the 15-minute chart. If that is the case, if we do see that retracement, we have a lot of liquidity from London's high. Right? We have not sure why it won't pull up my indicator. But yeah, London's session is in here. So we have London's high, we have trendline liquidity, and we have this higher time frame fair value gap up here that could potentially be like a scenario to watch, right? For price to just give us a bounce higher to set up further sell side ideas, right? We'll see if that takes place. Again, something that goes completely against this entire analysis and just this drop in price is the bonds and yields, right? But I think it's highly likely that we're going to end up getting this retracement, which is potentially going to be a tradable situation, especially because we have news that just came out. So that daily fair value gap up here is what I want to see price bounce up into, because we've been so bearish. And that will basically give us a good setup to continue to sell, right? So this is the part where a lot of people mess up, right? They can't be patient. Price moves in flows, right? So it moves, from consolidation to expansion to retracement, back to consolidation to expansion and retracement. Okay, so right now we've had an expansion, price consolidated. Now I wouldn't be surprised, like I mentioned, for price to want to run up here for a tradable buy side opportunity, right? To retrace against the overall sells, because everybody and their mama is probably trying to sell right now, seeing that big range we had the other day. So yeah. Well, good morning, SD. Appreciate you hopping on. So yeah, guys, I hope this has made sense so far. So that's pretty much what we are looking to see today. I do not trust getting in line with the sell unless something like that occurs. I'd like to at least see these stops taken before I consider even thinking about sells. But then again, it's Thursday. Thursday reversal could very well be in the cards at the moment. Looks like that is going to be the case. We have hit the weekly fair value gap, right? Midpoint, right? So a bounce from this fair value gap, specifically from this midpoint after taking sell side the way that it has, it's not unreasonable given the weekly range dynamics. We can see how there is a skewed relationship here. DXY is rallying, the S&P is rallying. Let's go see if the other indices are rallying too. Yes, all the indices are rallying, basically in line with that overall navigation sentiment I gave y'all in terms of the potential retracement based on the large range to the downside, and just the overall context of us reaching up a little further, because everybody and their mom was trying to sell, just to victimize them, engineer losers on the side of picking a low, and then engineer losers at the buy side, thinking that price is just going to continue running higher without them knowing the overall context we've discussed in terms of seasonality and just the overall structural change, right? So yeah, I hope that makes sense. We also see an SMT at the lows here, so that's another potential reason price can support the run higher potentially. Again, we're not going to take a trade right at this time, although it may deliver price up there, right? I am not comfortable with taking trades right at a news event. I'm just not. Okay? We are, again, in now a bearish scenario, okay? And the run higher would now have to be categorized as a counter trend idea. Counter trend ideas lead to us having half risk, okay? And until it positions with the overall narrative currently, which is now changed from bullish to bearish, we have to continue to realize that counter trend ideas have rules to them. And if you're not comfortable taking counter trend ideas, if you don't trust them, if you're not a person that's able to do that type of thing, then you wait for what would set up a continued bearish move, which in my opinion would have to see some buy side taken, right? Preferably the London's high, which is somewhere in here, right here. Okay, just another testament to why these specific indicators I have are important, especially for those trying to learn and train your eye. The sessions indicator, very helpful. The weekend day separator, it's also very helpful. This little gray box highlighting Sundays, because you get to see every week, right? So yeah, again, what am I looking for? Just so it's very clear to everybody, I'm looking for price to maybe use this weekly fair value gap we've punched into to give us some type of retracement before it sets us up with more sells, right? So yeah, we'll see if that takes place. There obviously is a potential for price to just continue to fall and be very, very weak. But, we're not trying to be people that pick tops or bottoms. We're not people that are here trying to catch a falling knife. And we're not people in here trying to be impulsive, like sporadic traders. We're trying to be professionals, and we are here for a long time, not for a little bit of time, right? So yeah, let's go to the 8 hour. So yeah, we got a fair value gap here, right? So we have also, again, we have this range from yesterday. We've hit a higher time frame PD array. Thursday, Friday reversals generally occur when you hit a higher time frame PD array after price has been one-sided, going into a Thursday or Friday. All right. So with that being said, the overall narrative at this point is looking like it's bearish, right? We've had a serious break in market structure. It's been very aggressive. We have a bearish power 3. Price doesn't go in one direction forever, and it has a tendency after a large range to create a small range as well as potential retracements, especially in this type of context with a bearish seasonal tendency, right? That's what would set up a bearish move, is price going higher, scooping up stops, positioning smart money at a short-term, near-term premium to then look to attack further discounts, right? The next discount, if we do get a rally up, is obviously the rest of this fair value gap, right? So we'll see how things transpire. News has come out. We can also kind of observe what has occurred off that news event. Things are very skewed in terms of the relationship here with the DXY, but nonetheless, I still think that this is a beautiful potential setup to go in the reverse because we've been so bearish, and it's just the way it is. We have a logical level, which is a fair value gap above price. All right. And this topic here also, a good lesson that ICT has created is called purge and revert. And if you go to that video today and you remember what this looks like here with what we're talking about, you will get a lot of aha moments on top of, what we're discussing here. Right? So yeah, looks like that is going to take place. So we will just see if we can find some type of position that can set us up for something nice. Obviously, this was a YouTube model entry here. Again, I don't like taking setups right at news events. So just an opportunity missed, but narrative has been correct. Okay, the logic as far as why price is going up is more important than worrying about missing a setup. So I hope the logic makes sense. So then the next time you're dealing with a situation like this, you now have tools in your toolkit for scenarios like this. Okay. So yeah, the next potential time window for us to consider, possibly finding some type of entry, timing wise, would be around the 550 time window to 610, which is in 10 minutes. So we'll see what happens from now until then. All right. So if we go also to the regular trading hours, we can see how there's a regular trading hours gap up here as well from the previous day. So there's even further reason for price to magnetize to go in the reverse, right? To then seek buy-side liquidity after all the sell side's been taken so far, right? So we got a regular trading hours gap, right? So let's go ahead and label that, right? Wherever price is at, we'll go find that. So far the regular trading hours gap is like this. following this. So wherever this goes, that's going to change where this is going to go. Because then that'll create the regular trading hours gap when 6:30 comes. So if this ends up being all the way up here, there will now be a regular trading hours gap below price. This is the close from yesterday's PM session. So that starts the regular trading hours gap for the current day. Okay, so wherever this goes, if this goes higher before 6:30, runs up into our level we're looking for price to reach into, taking stops, right? There may be a reason for price, if it does want to continue to go lower, there's going to be more reasons now to consider if the DXY continues to go higher for us to see price go lower and follow suit with the overall change in the narrative. And if you look at the DXY again, we can see how there's an order block here that's being used. I pointed this out yesterday with my private community. I think I pointed this out also on the previous session we did, I believe, which was on Monday, if I'm not mistaken. Right, we wanted to see how this was going to respond. If it respects this, then we could potentially start to begin to trust that things have changed, especially if we get down below this low, like I mentioned. And now we can see all of that has taken place. And so if this continues to hold here and then gives us more aggressive pushes to the upside, that's just further confirming the sell side delivery. And then also if we can amplify the fact that, maybe this uses, or if this the bonds react to the downside from here at some point, then that's just going to start falling in line for us to further trust the sell side delivery. And then if this can give us a run higher and just use this as a retracement to this order block on the yields, or if we see a reaction to the upside from here, then that'll be pretty significant as well, promoting bullish DXY, bearish indices. You can see how this low is our equal lows. I wouldn't be surprised if we punch through that, create an SMT, and then have the further confirmation for price to go higher in the DXY, promoting bearish indices. All right. All right, so let's go look at the currencies as well to have a further view. So if we go to the daily chart, we can see now swing low, broken. I talked about if this swing low was to break, then that can also be significant, providing evidence that price may want to continue to drop further. Now that we have that, on top of all the other things we talked about, minus the bonds and yields at the moment, for the time being, we have a lot of evidence that the overall narrative has shifted off the heels of that new quarter that initially rallied up, right, to start June, going into July, to then create an SMT at the highs and then start to decline, right? All right, so those SMT here at the highs, like I have mentioned. Quarterly shift was here, it bounced higher, then later ended up falling. Now we have a lot of evidence showing things have changed, right? Just to reiterate as well, when you're validating or invalidating a particular narrative or idea for a particular direction, if price goes from stops to stops, right, that's a good indication that price is probably going to continue in that direction where it takes the secondary stops. Okay, you think about that because it's supposed to be, if it's bullish, it goes from stops to inefficiencies or PD array at a discount. And then you can also use that logic coupled with the 3 PDA rule that I mention all the time for validation, invalidation. And we can see how 1, 2, 3 PD arrays have now been violated. This order block, fair value gap, swing low, right? Now we're punching into this higher time frame PD array. So given the fact that we have a potential change in narrative, coupled with seasonal tendencies, coupled with the price structure, stops to stops, not stops to inefficiencies or an order block, we can then start to reason with the fact that this could be a retracement to continue dropping lower, promoting the further sell side delivery. Okay, but again, for now, before that can take place, right, there's things that price must do. It can't just go one direction forever because there has to be order pairing, right? Smart money has to have losers so they can put their big winners on, right? It's all manipulation, okay? They have to do that process so then they can position themselves for one at reasonable prices, but also have enough volume in orders to put on their big orders incrementally, right? So that's why stop runs are so important, because when stop runs happen and then they go in the direction you're anticipating, they're basically showing you visually that they're triggering in stops. And most people don't realize that. Even some that are in the ICT camp, they just look at draws, or they just look at sweeps of liquidity or raids on liquidity, however you want to say it, as just, they're just like taking liquidity. And I mean, that's part of it, but there's more science to it, right? They're triggering liquidity to pair their orders, to engineer losers. That's why there's stop runs constantly. That's why, like ICT says, big runs generally come after or on the heels of stop runs. Right? So that's why you wait for a stop run for your model to form. Because when a stop run happens, work has already been done there. And if your bias is correct, it shouldn't come back to that stop run. If you're correct, obviously. And timing is very important. That's why I mention macros all the time, because that can save you from entering positions that will have you stuck, because things are all programmed. It's all programmed. It's all, it all has a process. And the more things that you're aware of to look out for, the better, right? Your model doesn't have to be confusing, doesn't have to be complicated, but you do have to have some unwavering truths understood, like the stop run theory, the impacts of fundamental analysis, because you can visually see the impacts of that seasonal chart I showed y'all at the beginning of the video, right? And this is a drill I tell my students in my private community: go back test the seasonal charts from the last 10 years on the asset you choose to engage in majority of the time. And you'll be fascinated at that study and just how systematic things are, and how you can go into each month being able to anticipate what could potentially occur, right? And then if things promote your assumption based on that seasonal chart, then you have some nice things behind you to support your ideas. Right, so yeah, let's continue to monitor this lower time frame. Right, so again, we have this idea we wanted to see. Right, this going lower is promoting this to go higher. Okay, so if we try to move up, maybe we'll have some kind of order block or something to try to gauge something off of. Doesn't look like it. So yeah, the initial entry here that we missed because we weren't fully looking at the chart, and the rules that we abide by state that we don't take trades right at news events, was this move here, right? You can see it's a run on stops. There's SMT at the lows here. If you go look at the other indices, and then we get that expansion. Okay, so now we have this fair value gap here. So if we can run down below this low, I would like to see that, because that'll trigger stops again. And then if price was to shift, if this created a swing high like it has here, if that stays intact and we run below this low here and then start to run higher and break that high, that is a continuation pattern of the YouTube model that's commonly been taught in the previous years. So missing this opportunity doesn't matter, because price can present the rules over and over and over again. But what you need to realize is, just because you miss a move doesn't mean the rules are not going to work. If your bias is correct, if you have a strong conviction and backing with the overall narrative you've painted, then you have nothing to worry about. But if you're over here worrying about the fact that, I missed this, I'm not going to be able to trade, I'm not going to be able to catch a move, I missed it, then you're blinding yourself from being able to see the reality, which is the fact that every model, pretty much for the most part, that ICT teaches has a continuation characteristic in it as well. Once the first move happens, maybe you wait for that move, right? But then you can come over here and see the move potentially occurring again with a run on stops and a fair value gap in a market that could be reaching for a premium, right? Once it shifts market structure after taking stops, right? If the narrative is correct, if your timing is also correct, it's 550. So if it takes this, leaves this swing high here, and then obviously breaks it, then if there's another fair value gap, you can end up trying to enter that to continue the narrative, and that would be your continuation variation of the YouTube model specifically. Now, they have the same thing going on for breakers. They have a similar thing going on for market maker buy and sell models, okay? They have it for optimal trade entry. They have it for all kinds of things, turtle soups, right? Whatever model you choose to operate within, keep in your mind that there's continuation variations. Keep in mind the specific rules, okay? And then just observe. You know what I mean? When you're able to continuously see different examples and memorize your rules, and don't just put yourself in a box thinking, oh, if one setup happens, I'm only going to be able to catch one setup. If you remove that from your thoughts and just keep in mind the rules and study based on that, you'll see your model perform a whole lot more. The world opens up to you a little bit more. Piece by piece, you start gaining clarity. And again, as I always mention, that's what this whole channel is about, is giving you clarity. And this is one thing that took me a long time to realize, right? And nobody mentions the continuation variations, at least from what I've seen. It's like it's something that is hidden, right? So look, so based on what I've just talked about, let's just study if DXY continues to tank. Let's study how when this breaks above this high, if it does, keep in mind the run-on stops after the original move took place. Keep in mind the run-on stops as a shift in market structure here, right? So run-on stops, shift in market structure. When a fair value gap forms, let's just observe how that could potentially position us to get up to our overall objective, which is up here, and then eventually up to this fair value gap up here. So now we are about to close in on a shift in market structure, run on stops, shift in market structure, relative equal highs, layered highs, higher time frame fair value gap for the draw on liquidity, off the heels of an S&T, off the heels of the narrative for the day being Thursday reversal, because we've hit a higher time frame PD array after aggressive bearishness the last couple of days, inside of a bearish power 3 for the week, right? So observe, right? Will the fair value gap form here for you to potentially participate in? Right? It's a counter trend idea, so again, you have to have your risk at half. Hey, what's up, Dominic? Appreciate you hopping on, brother. So yeah, same thing with the NASDAQ. Okay. Watch this, these consecutive down candles. Let's watch this here. See, we're also inside of this. What is this? I think a daily fair value gap as well, if I'm not mistaken. Yeah. So maybe that can be also utilized for context of supporting the idea we've just mentioned. Okay, so we've now returned down. So let's just see how this plays out. We're inside of a macro. All right. There's SMT at the lows. It has left equal lows as well. Right, but again, I'd like to see the London's high potentially get attacked. It has triggered stops here. We have hit a fair value gap here. All right, so let's just observe, right? See, does all this stuff make sense so far, you guys? I hope it all makes sense. Yo, what's up, Nico? Appreciate y'all hopping on. Nice, brother. Yeah, that's what we were talking about. Continuation variation. I drill that into your guys' head in the private community. So hopefully you saw it right away and thought about it right away. So yeah, let's see what happens. So yeah, like I mentioned, even if price is going higher, just to go lower, this is a counter trend idea now. Okay, so you got to keep in mind, counter trend ideas are higher risk. Right now, in this case, we do have a pretty decent bias observation with price to further set up more sells. That doesn't mean it has to happen. The theory and logic around it are unwavering truths. Okay? So yeah, just keep that in mind. Nice. So yeah, that's exactly what I'm talking about. Using a 0.25%. Since it's before the New York Open. Just regardless, using a 0.25% or 0.5% of what you normally use is very much advised because obviously it's a counter trend idea. Good morning, Maddie. Hope you're having a good morning as well, brother. Appreciate y'all hopping on. So yeah, in this case, if something was participated in here, right, your stop would be below the low here. Right, so not only would this be an idea that would have to be cut in terms of risk, right, you'd also have a very, very small risk, the very, very logical target framed from the higher time frame. Right? I like what Nico pointed out here as well. He said that it's before the 6:30 open. So technically we are trading within the manipulation. Okay? The justification for price to potentially want to continue to go higher just to turn has to do with the weekly range and the fact that price is heavily basically tanked and it's hit a higher time frame PD array. So it's logical for us to continue to go higher. Okay? Just to set up, you can't forget, that's just to set up for potential continued sells because the narrative has changed. Right? So that is the logic and reasoning as far as, why this idea is what it is. Right? Now we can also see how this is potentially showing support here, right? But if we get DXY to rally though, then it may not even be able to have the strength to get up above into here, and then it would potentially cancel out the run higher for the moment, right? And then if that was to be the case, right, if someone got taken out here, if they did participate, you would basically then wait, because timing wise, we also used a macro. Okay, so if something was to not play out, you would just wait for another macro, right? You would keep in mind the fact that, again, this is counter trend idea. The logic is what you want to pay most attention to, okay? Because obviously that's, it's adding to your toolbox. So yeah, I hope everything's made sense so far. I do think that this was set for a reason, these equal lows. I'm just looking to see if price can get up here, sweep out this liquidity. If we can get that, that's generous. But if not, right, this is what price will likely try to head for. Well, we'll see. So with DXY running higher right now, it's most likely going to turn this against our move, right? So we'll see. So NASDAQ has set triple highs. There's also SMT at the highs between the Dow and the two indices. It's SMT here at these highs. But you can see clearly that NASDAQ has set these highs here pretty cleanly, right? Again, that's in alignment with the overall retracement idea, right? So we'll see what transpires. Again, we may use this here as support, but with DXY rallying, it's going to, in my opinion, be difficult for this to try to get up above the highs. This here may set up a sell, right? Not really much of a stop run here, but there was a shift in market structure, right? So again, if this gets taken out, we would wait and continue to remember the higher time frame narrative, which we've painted, and it's bearish, right? But we have the potential, because it's Thursday, for price to reverse, which seemed to be what was being promoted, right? So again, just to amplify what one of my students mentioned, Nico, he mentioned before, that this is before 6:30, right? Which is the open, right? Generally before that time, we're inside of manipulation, okay? And things like, like this could take place. It could be very difficult to read at times, or it could look like it's clear and then all of a sudden turn around, right? Just waiting for the time. It just shows the importance of the time element, okay? Things are programmed to do certain things at a particular time. So even if your model shows, if it's not in the right time, in this case we used the macro, the 550 macro, to try to see if this stop run and this run on this shift in market structure here would potentially get us up above this buy side liquidity, to then go forward and position us potentially for a further drop, right? So I would have wanted to see this happen above these stops here, right? Technically, we have taken stops. This is just promoting to me that things are very bearish and buys are probably not interesting, right? Especially if this just continues to try to continue to drop. So you see this down candle here. Oh, we got to watch and see what this does. Right, if price was to run up and get above here, it just goes back to what I was saying about the continuation variation. All right, now we have another run on stops. If it was to break above this high here, create a fair value gap to enter on, then that's kicking back in line with the buy side potentially being targeted. But if it stays below this, it stays below these down candles here, we could potentially see this begin the sell to then target these lows, right? Because we're before the 6:30 time, we have to observe what it's going to favor right now because we're in manipulation right now. All right, so let's see what happens here. So now we got a real run on stops, juicy run on stops here, back to an order block. If you go from low to high, that's at a discount. All right, so this could be potentially setting up for a better run within the 550 macro still. It's only 607, so 550 to 610. Right, so has a little more time to potentially keep us in line with this idea, potentially going higher. This idea, obviously, with price breaking through, like this entry specifically, is invalidated given what has happened here. Right, but we'll see if the idea for price to go higher gets invalidated. Like if this low was to break, then yeah, there's no interest, right? Like to try to see price go higher, because that would just indicate really heaviness, like it's very, very uninterested in going higher, right? So yeah, watch this here. This is a run on stops, shift in market structure. If we can get a larger candle to break above it and close, and then we can again possibly see price ambitiously get up into this level here. But that is again counter trend, right? We're trying to frame out the counter trend perspective to then position us at a better position for identifying our model back in line with the overall changed narrative, which is now bearish. All right, so your heavy positions, or normal positions I should say, would be pushed on sell side because we are now in a bearish market. And if this entry was something you would have participated in, you would have had half risk, or like Nico said, a quarter risk, right? Because it's a counter trend idea. Right, so there's rules for different scenarios, and that's one of them. Counter trend ideas, trading in consolidation, so on and so forth. See, now with this here, if this was to break down below this low, these consecutive up candles here could be classified as an order block. So if price was to promote a bullish DXY continuously, and then if we smash through this low, that would be a pretty nice thing to possibly frame a short idea to then continue the overall narrative, which has been bearish, right? So the perspective we've just discussed and the things that we're going through right now kind of opens the curtain to how ICT trades both sides of the market, but doesn't lose focus of the actual narrative. He's able to frame out the manipulation. So a run up from here is going to be manipulation inside the overall narrative, which is bearish because it changed from bullish to bearish, right? So this run up is manipulating people trying to sell when that's the overall narrative. So understanding the manipulation, there's a rhyme and reason for why everything happens, and being able to understand that manipulation and the characteristics and how price operates delivery-wise can help you eventually learn how to trade both sides and possibly pick which side or school of thought you resonate more with? Is it counter trend ideas after you've confirmed a bias, or is it with the trend, or do both of them make sense, right? So yeah, we can see how they're pretty much chopping people around. Looks like NASDAQ could be ready to start to push. Just gave a turtle soup, right? It took stops, then took stops again. So this is 1, 2, 3. That's a 3 drives pattern, bullish. You see how price shifted market structure here, returned to another fair value gap after taking stops. That's another YouTube model buy move, or another continuation variation example, right? We can see the yields wicking lower, so that's promoting potential bullish DXY, right? So we'll see if that is what ends up happening. So this little retracement here, right, seems like it's going to continue to possibly share interest with this continued manipulation against the higher time frame bearishness in line with a Thursday reversal. Okay. So I hope you can see the fact that there's multiple things layering on top of each other. Bias and narrative is like an onion, like I always say. There's multiple layers that have to agree for you to have confidence and gain trustworthy clarity. So yeah, keep in mind that there's that S&T here at the highs. So again, if this breaks through this low, this becomes a breaker. Okay, this becomes a bearish breaker. These consecutive up candles are likely an order block. So if price breaks down below this low, if it doesn't get up above here first, which is what I want it to do, to really pull people in, then that would be the time where you can observe the continuation view that I've been touching on today for whatever model you're trying to use, right? So again, I'd like to see it go up into here, come up and sweep out more. And again, this run on stops, right? Shift in market structure presented an idea here in this fair value gap. Continuation variation, right? Counter trend, right? So it's high risk because at any moment, if DXY chooses to turn on you, this will turn around because it's against the overall narrative, right? There is a pretty good possibility that this could be a Thursday reversal and not even attempt to get down here again, right? But again, we can't force our will in the market. We can just observe with unwavering truths and then navigate with what price speaks to us, right? And so far, right, it still looks like it has room to continue to push to the upside, to, again, pull in further liquidity, right? Because they've expanded aggressively. They've hit a higher time frame PD array and took out a lot of sell-side liquidity on Thursday. So because it's been super bearish with that context going into a Thursday or Friday, it's reasonable for this to want to give a pretty decent retracement, right? So again, just to be clear, what would kick you into knowing that the timing for a sell idea would probably be relevant versus trying to catch the buy, right? Positioning up above these highs, Well, if price is to break through this low, again, this becomes a breaker, right? All of this here, right? It seems like it's pushing away from that, right? So it's obviously not valid for a bearish breaker just yet. But if it breaks down below this low, you then have an order block and then a bearish breaker to go off of. And then you also have an inversion for value gap, right? So those would be reasons on top of the bearish sentiment and seasonal tendency for you to then get behind price attacking these relative equal lows, right? So like I mentioned a lot as well, bias sometimes changes day to day because there's consolidations, there's retracements, so on and so forth. Narrative doesn't always change rapidly. For the most part, it's set for a decent amount of time. So if you can get the higher time frame narrative understood, in this case it's bearish for the time being because of multiple factors we've discussed. But just because it's a bearish narrative doesn't mean there's nothing to frame out to the upside. Because those things moving to the upside position you further at better positions in relation to premium discount for you to then position yourself for a decent sell and a larger range move at the end of the day. Right? And the fact that counter trend trading can turn on you at any given moment because it's a counter trend idea, it's going against the wave, you have to have protocols, right? You have to have rules. Situational awareness is critical, okay? And having specific rules eventually for specific scenarios and conditions in price delivery, it is imperative, right? And obviously a lot of that comes from experience or you being able to shadow someone like you guys are doing right now that understand this, right? So let's see how price uses this little fair value gap here. So yeah, with this dropping lower, once it gets above this high, this now becomes a bullish breaker, right? As a high, low would be a higher high, right? So then that can also be something to either tape read or consider, not financial advice, or consider for a potential positioning within the context of price coming up into obviously these highs here, right? Counter trend idea. So yeah, I hope everything makes sense, you guys. Let me check the, this could be accumulation phase. Then we might see Judas swing lower at the open and continue higher, hopefully. Yeah, I mean, that could be reasonable because we may, because of all the bearishness we've seen, we may have this counter trend idea be a bullish power 3 within the higher time frame weekly bearish power 3 in the context of a Thursday reversal given the PD array we've met, right? So that could very well be something that takes place, justifying even further context for the run higher that we've been talking about, right? And just because it goes higher, does that mean you change your bias or your narrative overall? Absolutely not. Because remember what I said, bias generally can change day to day because of retracements, consolidation, etc. Narrative stays intact, and the overall counter trend biases that happen within the context of retracements in a larger time frame narrative are short term in nature, setting up actual continued moves within the higher time frame narrative, right? That concept there and the ability to navigate that is one of those things that completely derails traders, because once they catch a buy and the market's bearish, but they don't know the overall narrative is bearish, once it turns on them, they think, oh my God, I don't know how to trade. And then they just spiral out of control, when it's like, dude, you need to realize it moves in phases. Expansion, large ranges, turn to small ranges, then they retrace, and then they create large ranges again. Right? So it's an ebb and flow that you have to begin familiarizing yourself with. And again, part of that comes from experience, but also part of that comes by you guys going out of your way to watch people that have proven that they understand it. Right? I appreciate all you guys that have liked the video. Definitely helps the channel out. So I'm super grateful for you guys. Thank you for being here. Hope you've gotten value so far. And if you guys, obviously, if you ever have any questions, definitely just leave them in the comments, or just DM me on Instagram. All right, I'm more than happy to help you guys out. And if you're not aware that I have a private community that you could join, we go live pretty much daily. It's a very tight-knit community where everybody is important to me, and then everyone's important to each other, right? Everyone helps each other out. You know what I mean? So if that's something you'd like to participate in, then that's always an option as well. If not, I still appreciate you guys being here with me on YouTube. And again, I hope you guys get value on your way to clarity, right? Because that's the goal here. All right, so let's just continue to monitor what's happening, because now we have basically stalled out on the DXY. Again, I'm still of the opinion that we're going to try to reach higher. So yeah, and remember that fair value gap I mentioned was here. I said watch that. So watch what the response will be from here, because that can hold, and you can see what it's doing. It hit that, and now it's holding. At the same time, DXY is now dropping. We got this area here also. In my opinion, that could be significant. All right. That'll end up being, like I said earlier, a potential breaker. So let's just continue to monitor. And then obviously you can see the different targets that I'd like to see on our way to the level that, in my opinion, would be very nice to see to position for further sells. Like once price gets up into here, right? Because remember, liquidity triggering or being taken out generally means smart money is positioning themselves, right? A lot of times that's what they do. Most times. The big moves come off of stop runs. So when you backtest or tape read or do anything, or even consider thinking about any type of position, the first prerequisite pretty much for almost every model, right? Not all of them, but for almost every one of them, requires a stop run, for the simple fact that smart money does that stuff to position, to pull in losers so they can pair up their orders with those willing losers, so then they can drag them through the mud and break their account. And so this here takes away my interest in seeing price move up, at least for the moment. Right, so we'll see. We're really, really close to the open price, so you keep your bullets in the chamber You don't push anything around these times because fireworks are going to occur. Right? And whether we punch up to, attack further buy side to eventually sell off again, or if price chooses to decline and break down and not even have enough strength to do that because DXY is so aggressive to the buy side right now, then we'll be able to adjust to that as well. Right? Because if we move up in these time frames, we can now see that there's an order block here, there's an order block here. So price busting lower, right? Those are levels that we can then start to monitor as well. We have this large wick here. Right? I wouldn't be surprised if it tries to come back down into that. Something I've mentioned all the time about wicks is the fact that the midpoint of the wick, if we can't get this candle to go to the midpoint and we see DXY decline, that's showing strength. That's a strength signature. Same with if we can't take this high up to the midpoint of this wick. If we stay below that and fail and just start to tank, that's showing further institutional order flow signatures that price is bearish. Right? So the wicks are very, very important. Right? Just notice. Right? Notice how price uses the wicks. Right? Candle printed again. It got above it but closed below the mid. Right? Got above the midpoint, closed below the mid. Couldn't even get to the midpoint of this wick here. Couldn't even do it again. And then what happened? It tanked in the context of price digging for sell side. So yeah, this here is a, what is this? 15-minute shift in market structure. Right? There's a 15-minute possible YouTube model under the context of price getting up into here to then positioning for possible deeper sell-offs. But again, until something like that happens, you got to wait. You can't be in there pushing. We broke down a lot of stuff on the 1-minute chart that could have that made sense, right? That for the most part had an opportunity to play out. But obviously you can see what's happened. Price is manipulated because we're ahead of 630. Okay? So this is just a beautiful visual example of the risk of taking trades before the 630 open, as Nico mentioned, which he's one of my private community students. We talk about this all the time, right? It's before the 630 open. So he dropped his risk to as low as a quarter, right, of his normal percentage. It should be cut already, at least by half, if you're trading counter trend, right? But the fact that it's counter trend and it's before the 630 open, meaning we're basically trading counter trend on top of trading inside of the time window before the or inside of the manipulation, which is pretty much all the price delivery before 630. You lower your risk, because the number one goal as a trader, which many people don't even realize, some do, I'd hope most do realize, but right, shit, hold up. Sorry. I just got a text from my dad. Sorry. Hold up. Sorry, guys. Give me one minute real fast. I'm sorry. Sorry about that, guys. Got an important text. What was I saying? So yeah, trading counter trend ideas plus before the 630, you got to drop your risk. because the risk is elevated, right? Because you're going against the trend, on top of the fact that you're before the 6:30 open, which generally has the manipulation take place. Okay, so you don't want to be a gambler and be a psychopath and force yourself upon the market, because the market will also force itself upon you and physically, financially, and mentally remove you, right? So you got to be very, very aware of the different ways that you need to operate, right? So yeah, now 6:30 has taken place. So let's see what it's going to do, right? Now it came down to the fair value gap here, right? This is also a run on stops, right? So Thursday reversal, at least from what we see here, seems like it's going to be continuing, right? That's invalidated if this low breaks. So run on stops, breaks above this high, that's a shift, right? So if it was to do that, create a fair value gap, that could potentially set you up, right? But again, just like with the 5:30 open that we talked about earlier, we don't ever look to take a trade right at 6:30. We just don't do it. It's not worth it, right? The next idea, which I mentioned earlier, would be considered around the 6:50 macro, right? You just continue to wait, continue to let things operate, continue to analyze and figure out what the hell's going on, right? Get a feel for what's happening. See what liquidity has been left, right? We have a decent liquidity pool here. Let me throw this. Okay, so we have London's low down here. Okay, London's low is here. We talked about London's low, London's high last, I think on the last call, how important those are. It's got the London's low, got the London high up here. So before it even gets to the previous day's high and low, right, it's going to have to go through the London's high and low as well, or whichever direction it chooses to go. All right, so remember, if this continues to go higher, right, we're watching to see this low. Seems like this low is going to now be violated. So now we got SMT at the highs, so I'm confident that we are now ready to possibly position to continue to smash lower, unless that chooses to be invalidated. For now, it seems like we're kicking back in line with the overall downside narrative. All right, so London's low is the first target. Right, if we sweep down below this low off the heels of this SMT, that should be pretty significant and trustworthy. NASDAQ did give one more push higher, reached up above, stopped out the highs here. It did leave some of the highs I wanted to see taken, but this is just showing us that we are much more weak versus willing to go higher. There's not only SMT here, there's SMT here between these highs as well. Okay? So yeah, taking that into consideration, I am willing to start thinking about sell ideas in the S&P. We got this inversion fair value gap. We have this wick. Okay? Measure out this wick to the midpoint. All right, if we could stay below that, we've already now swept out the lows here, so let's just see if that is something that's going to continue. Let's see the response from here. All right, so SMT, fair value gap. Right, these consecutive up candles, like I mentioned earlier, they could potentially present us with a order block. Okay, so look at this low here. Okay, let's see how it chooses to respect it, and I believe it just did with this. All right, so again, my target seems we've kicked back into sells. So before any other higher time frame level gets targeted, the London low will have to be taken out off the heels of the SMT. Okay, inside the bearish narrative. So you see what happened here, how it just changed and turned on a dime versus us thinking that it was going to go up here to then do this. Well, price had other plans. And you see the quick change in the delivery based on time, right? 6:30 comes and boom, it turns around on them. So that's the risk of trading for one before the 6:30 open, because it was just manipulating being held. And then obviously the importance of time and counter trend trading, right? So yeah, definitely had a lot of fast decisions needing to be made. We do have a broken symmetry going on, but we have the equal lows here on the Dow, so I'm confident, pretty confident, that especially if DXY continues to go higher, we'll just continue to see this dump. For how long? Like how long will it dump for? I'm not 100% sure, because we've already been so aggressive to the downside. But then again, things can drop aggressively. We can't pick tops, can't pick bottoms. We have hit the higher time frame PD array, that being the weekly fair value gap I pointed out, right? Also an order block here that we can see, right? So I'm not sure if it will want to continue to smash through it. Given the fact that it's Thursday, things have been so aggressive and we've hit a higher time frame PD array, there's always that thought of price using that as a reason to give a Thursday reversal, right? So you don't want to fall into the trap of chasing price, right? We got to be in a position to have things make, logical sense given the time, right? So this, in my opinion, for the time being, given the fact that DXY is rallying, seems that we can favor potential short ideas, right? So we have that fair value gap it failed to get into that fair value gap there. Let's see how that fair value gap fares. DXY is still pumping. So yeah, let's see. London's low is, in my opinion, in the crosshairs. Having beautiful sells, at least for now. So DXY has taken this high, so let's see what the response is. If we can't get a quick response to continue, and it looks to use this high as a reason to take stops and then start to tank, obviously we may not see this have a lot of energy. And look at price already since London, right? So we've kind of stalled out inside that higher time frame PD array. Right, so again, you want to wait. You want to have patience. Yeah, Nico, there's SMT, right? There's all these different things promoting the idea that price is, has a likelihood to drop. Yo, what's up, Byron? My freaking brother. What's up, Byron? Yeah, so when there's two SMTs, we have to look at what DXY is doing. So remember that breaker I pointed out, okay, the bearish breaker. Oh shoot, whoops. So let's continue to monitor this range here. But DXY has now used that high to reverse. So that's kind of suspect, right? So again, we still have the context of a Thursday reversal potentially. So just take a look and reflect on the feeling you're getting and how price is just unwilling to have a one-sided delivery, right? It's hit a higher time frame PD array after being super bearish, right? And now it's dancing around inside that higher time frame PD array, right? Giving both sides manipulation, right? So you can just see, like, in my opinion, if you've entered and taken a loss, you definitely need to wait, because you could just see it's looking to victimize both sides. Those that think price is going to be able to create a bottom and go higher, and those that think price is going to continue to sell and go lower, right? We've had both opinions this morning, and it's given evidence for both sides. And then DXY has only been showing one side up until this point, right? So now it seems like we may give up the ghost and go back to the original idea, right? Because of the consolidation inside of that higher time frame PD array, because of the crack and lack of correlation between the bonds and yields as well, along with all three indices, right? They're kind of doing their own thing together. Plus the fact that we were super aggressive to the downside on a Thursday with the likelihood of a reversal. There's a lot of conflicting factors going on. So again, just going back to what we were talking about in terms of situational awareness, you have to be aware of these things that are in the market, right? Not every day is going to be a one-sided 500-point move, right? Easily read. Sometimes it's going to be a little hectic. And the only way that you survive and give yourself the chance to endure those and stay in the game long term is by continuously having risk management at the forefront of your mind. Like, for example, if you would have taken a loss here, most people would have, with the opinions that we've had, probably would have taken 2 or 3 trades, both sides, trying to force the position to be in play, right? When in reality, it's not showing that it's favoring one side or another just yet. DXY has now turned, right? There's a lot of factors that lead us to believe that sells will likely not continue aggressively, but then again, there's also reasons for it to possibly continue, right? There's also reasons for price to want to run higher. Because we're at a higher time frame PD array, and prices being held at this point, I mean, you could just see the range. We're back and forth between the extreme high and the extreme low, this current range, hovering inside equilibrium. Because that's the case, price is doing what it's doing, right? It's very, very manipulative, trying to feed both sides, build liquidity, to then possibly violate both people and interest you into taking too many trades, which most people probably have already done, right? So in order to not be part of that camp, right, you got to just be patient. The fact that price is so sloppy right now, it's just not something worth participating in anyway. I know we want to take trades, and I know we want to get in, and I know we want to beat up the market, right? We want to get some money, right? Or blow, a demo account to 1 million. But sometimes you just gotta wait, right? And it's, a lot of times best to wait, because you'll position yourself and gain more clarity, because waiting plays a part in you being able to gain clarity, right? So you just gotta have this wisdom, right? It's one of those things about trading that people have a hard time with. But once you get sick and tired of continuously blowing your accounts, not having any structure, breaking your rules like continuously, not getting the results that you aspire to get, eventually you'll wake up one day and think, damn, I need to make a change. And then once you're at that level where either you have no money or you just have no more mental exhaustion to continuously blow your account, then like ICT says, sometimes that's what it takes for you to be ready to learn. Hopefully you don't have to deal with that because it's painful. I know I had to deal with that. But eventually people come around. So yeah, see how everything is kind of moving together? How DXY is dropping, the indices are dropping. It's just playing this very sloppy, manipulative game. Right? This is a scenario where rules keep you safe. Right? Because otherwise, if you're in there with no rules, no limits, no conditional awareness, and awareness to the fact that sometimes things won't be clear and they are not worth your participation, without that wisdom, I mean, this is a rough endeavor, right? If that's being allowed to take place with no controls. See, it's like it's whipsawing the crap out of anybody that tried to sell, anybody that tried to buy. It's like, screw your fair value gap, screw your potential whatever entry up here. It's saying screw both sides. DXY is doing something, but I don't care. I'm gonna do whatever I want, right? Just think about this too. Is there any position besides the one I pointed out over here? Is there any position that you would have felt, yeah, I'm 100% behind whatever direction it's going right now? Is there anything telling you that? For me, absolutely not. So because that's the case, am I over here saying, yeah, let's just, for one, let's tell all of you guys, because, you know, I want you guys to be excited. Let's tell y'all to enter, knowing that it's hard, like to read right now, and sloppy, and high risk of you taking a loss, including myself, right? Is it responsible to do that just because we're on the chart? Because that's probably what most people are doing live right now. And then trying to justify why they got it wrong, and it's the market's fault, and all this other BS, right? Or take the route that ICT teaches, right? Patience, rules, see the situation at hand, and not be a trading crackhead, right? It's because we are also below the 630 open and below. So it would be difficult to sell, in my opinion. Plus we have yeah, exactly. Exactly, Nico. Exactly. So given the fact that DXY is doing what it's doing, right, it seems like if DXY does fall, right, if the yields choose to fall here, right, maybe eventually it'll kick back into having some sense. But again, remember what I said, wait for 650, all the macros. See, if anyone would have tried to take a trade before the rules state you should take a trade or even consider taking a trade, think about it. Using the macros themselves only gave you only 2 chances to consider finding an opportunity, right? So that was over here on 550 to 610, and then all this was a bunch of garbage, and then now 650 to 710, right? So now you're able to look at things and think, okay, what is at hand currently, and is there an opportunity for me to take, right? Is there anything in price delivery right now that looks like I should participate and take a trade, right? If the answer is no, obviously, you got to wait. Right? Let everybody else blow their accounts. Right? Decide today that you're not in that camp anymore. And start by setting rules. Find your weaknesses. Place rules in front of those weaknesses to try to, try your best to mitigate those issues. That's what we do in the private community. Right? You find rules that you can trust, that are proven, and that are logical, and then you just start knocking things down that way. That's the hard part, though, right? A lot of times the identification of the issues we have is the easy part. The hard part is getting out of your own way, okay, and not allowing yourself to go off the rails because of our human impulses. I appreciate the sub, brother. Appreciate you. Appreciate your interest and your attendance. Right. We go live twice a week here on YouTube and pretty much every day in the private community. So I'm grateful for all of you that show up, that prove that you want to take this serious. But yeah, you fix a lot of the problems that you come across by adding rules. And again, if you can't follow the rules, that gives you clarity in terms of what the true cause of the issue is. If you set rules for yourself and you refuse to follow them because you think something in the moment, right? If you go against the rules just because of your impulses in the moment, there is an impulsive problem that will lead to a tremendous amount of other problems, right? So you gotta knock that out and be honest with yourself. We have nobody to impress. Okay, none of you guys have anyone to impress, at all, besides that person in the mirror. Same with me, right? I don't do this to impress. I do this to impress upon you specific schools of thought to help you get yourself on the right path, and it's up to you to do the work, right? This is just sharing insights that have been very valuable to me, kind of helping navigate price, with some training wheels, I guess. And then eventually, you'll be able to ride on your own, which is the entire goal, and then maybe you drop by here just to hang out, right? This is like a little family, right? The private community is tight-knit, and, the YouTube channel, I hope, can also be that way as well. But yeah, right? A very simple tactic to fixing problems, like I stated, has to do with placing rules in front of the problems. If you overtrade, tell yourself today that you will follow the 1 to 2 trades a day rule. If you over leverage, force yourself to not over leverage. And how do you justify following the rules? Well, do you have anyone that you're doing this for? Did you start trading for a particular person to improve a particular person's life? Right? What is your why behind why you started trading? Well, the reason you shouldn't break your rules is because you don't want to let that reason down. Okay? Write that down. Put it on your wall. I have a picture of my child next to my desk. So if I ever think about over trading, I'm basically looking her and my daughter in the face, saying that I don't care. I'm just going to do whatever the hell I want. And that's not reality, right? Like, this is something that I cherish just as much as I, cherish my daughter, right? Obviously, she's cherished more, but this is tremendously important to me. So if I'm going to do this long term, and I want this to actually be a successful endeavor, and if I want to actually help other people as well in the process, I have to be a certain type of way in this. Treat it like a business. This isn't just some willy-nilly activity that you do on the weekends, right? This is some serious business, and you can make some serious changes, but you also have to treat it very seriously, right? Part of that has to do with knowing how to, or developing processes to fix your problems, because we all have problems. We all have issues, things that we do that we need to change, right? We have things that ways that we think that should be changed, right? That can hinder our success in business, our success in relationships, and other things. So you have to be humble enough and willing to identify those things, hold yourself accountable, right? And if need be, get around people that will hold you accountable, right? Whether that's like a community like this, or telling a family member, right? Or whatever you could think about that can help assist you in holding yourself accountable, right? Because just keep this in mind. If you don't know, or if you don't focus on risk management, if you don't have an organized process, okay, if you don't treat this like a business and consistently practice and do, what you should be doing, then you're basically telling yourself you don't care if you're successful. You'll willingly accept failure. Like, yeah, I'm just going to do whatever the hell I want to do because I feel like it. Doesn't matter if it affects my trading or stops me from being successful. I'm just going to do whatever I want to do. Right? If you think that way, you're just willingly inviting mental hardship and a high probability of completely failing, right? And it doesn't need to be that way. Again, it's a shift in mindset. It's a accountability. Everything you do, you have to hold yourself accountable for. All right? It's just some things to think about, right? So yeah, when we look at price right now, we can kind of see how this is an intermediate term high now, right? This delivery away has now proven this is an intermediate term high. So because this is an intermediate term high, right, it's been very hard to try to trust getting into a sell here. But obviously it has kicked into the sell. So we can technically see this run up above the high here, break down. This down candle can be technically looked at as a order block. Well, these up candles could be an order block. And this can also be looked at as a very sloppy potential breaker. So, price returning back into this, right, we should not see this candle being violated. We should stay below this, right? So if it does give a chance to return back, right, in my opinion, if DXY continues higher, that is a decent move, right? So it's done a lot of very, very choppy work, right? So again, you got to go back and ask yourself, is there anywhere in this price delivery that lines up with our rules, lines up with the times that we'd like to enter, lines up with the things that we have forced upon ourselves engagement-wise? Does anything line up with the model that I can sincerely go out here and say I trust? For me, no. The answer is no. There's nothing, right? There was only this that was considered, and then this here could have reasonably been looked at as maybe a buy, given the fact that things sold off here. But again, we're, like I mentioned, inside of an extreme high here, extreme low. That was at equilibrium, so that's why it chopped around and couldn't break through it, because it's inside of a consolidation based on from London's delivery inside of a higher time frame fair value gap we painted out, right? It ran all the way down there from the previous day, and then now it hit it and has now kind of chopped around. Had a possible interest for a Thursday reversal, but instead price has chosen to stall out and just really cause pain on both sides. Took out sell stops, took out buy stops. That seek and destroy profile presented a potential breaker here, which in my opinion, now that we're looking at it and it's delivered, obviously that stayed intact, right? Well, if you come up into here, this is the breaker. Okay? So that pretty much stayed intact to the tick, right? But again, being able to trust something and paint it as high probability is obviously having to do with overlapping confluences. This here, right, I said if it pulls back into there, that'll probably be an opportunity. There's the opportunity. Right? So remember, 650 to 710. What time is it? 650 to 710. Beautiful delivery. So mind you, if you were trying to trade inside the 550 to 610, this was the price delivery. Didn't really offer much, right? Maybe you would have taken a loss here, right? But if you would have waited till the next macro, you would have been able to position here with further evidence that the overall DXY was, given a retracement at that time, bullish, or just a run bullish in that moment, right? And then the retracement back to this breaker and order block, or however you want to classify it, right, inside of a fair value gap. So if we see price here tank on the DXY, and if price gets above this swing high here, right, this may still have the chance to turn into a Thursday reversal, which now would be sweeping out a pretty large pool of liquidity. If that doesn't happen, then obviously we'll continue to most likely see price attack the sell side inside of the bearish narrative. And then Friday can potentially be considered as a possible a possible Friday reversal, TGIF, right? If everything lands inside of a higher time frame PD array below price, right? But yeah, something you want to note is when a higher time frame PD array is met after a large expansion, right? You want to make sure that you are considering, like in this case, right? It dropped all the way down to this weekly fair value gap, right? You want to consider going into that next New York session that price is going to most likely, if it's on a Thursday, it has a chance to reverse. If it's on a Friday, it has a chance to reverse after a large range day. Or price can maneuver inside that specific PD array and then give you this, right? Just look at it. It's very, very, very sloppy from London, right? It finished off in London, reversed all the way back, and then just came back in and chop, took out buy stops, took out sell stops, just to then end up using the bearish narrative, right? Lack of symmetry, you could see, right? DXY is tanking. Indices are tanking. If you look at this, you can see that this 6 minute pretty much presented a breaker here. I had that pointed out. SMT was at the highs as well. I would have liked to see this occur above these highs, because these were too clean. I didn't, given the fact that it's Thursday, given the fact that we hit a higher time frame PD array, coming into the day, I wanted to see that taken to then possibly set this up, right? But it obviously didn't play out that way. It just chose to take this, then it presented the move lower, right? This came up, hit this fair value gap, right? This is technically a YouTube model entry. It's also a breaker, bearish. It's also a consecutive up candles, which is an order block entry. So you can see how overlapping PD arrays or models are also at play here, further promoting the sell-off in hindsight, right? So yeah. So remember, all the discussion we've had today was either, for one, it was going to run up to go lower, or it was just going to fail to go up and go lower and just continue to go lower. So what has the overall narrative been from the very second we started this? It's been bearish. Any buys were counter trend, right? But the overall narrative was bearish. Given the fact that it's Thursday and we were inside of a weekly fair value gap, there was a chance for the bias short term to be bullish, to position further sell side ideas given seasonal tendencies as well, right? Yeah, this here was beautiful. It seems like NASDAQ actually, yeah, NASDAQ had a lot cleaner price delivery than the S&P. It was a whole lot prettier of a picture, in all honesty. But it happens. It happens. This here again, this is a breaker, like I said, and the S&P also happened in the NASDAQ. So let's go to the 1 hour. Let's kind of see where we are. It's a magnificent decline. I mean, this may be pretty wishful thinking, but yeah, I mean, it doesn't look too far off if you ask me. Probably not today. I probably won't hit that today, but that looks pretty juicy if we do continue to give continued sells. Narrative, like I said early on, we've now changed, right? We considered it during the beginning of the week, right? We wanted to see what price would do, right? I wanted to see this come up into here, then drop. I mentioned that as well in the initial call. So pretty much, bearish power 3. I said if this was to break through, then sells would not be trusted. If you go back and watch that video, this drop was further confirmed, obviously, when we dropped down below this low. I didn't even honestly think that we were going to have this large of a move. Like I said at the very beginning, basically this entire drop-off is coming from the tech sector dealing with problems having to do with China and some type of supply chain scenario, because they're trying to move away from China manufactured parts and stuff. I guess there was some issues they're having with some of the stuff, so they're trying to get away from it. And then mentioning that, having to hit the headlines, and then obviously what happened with CrowdStrike, all of this negative news has pretty much fallen in line with the seasonal tendency, which is bearish. So if you put all the headlines aside, I mean, seasonal tendency gets you in front of this as well, right? So you can just piece things together. Headline, seasonal tendency, COT, all those different things, which we're going to have a deep dive in start or at the very beginning of next month. Or actually, probably in like 4 days, we'll probably dig into some fundamental analysis. But yeah. So it's a pretty magnificent drop, right? Unfortunately, in the S&P, because that's what I was focused on, there wasn't anything that I saw that fit my rules, aside from this, right? Potentially getting us to the buy side. But, it happens. And then in here, I was not feeling this price delivery. So I definitely did not pull the trigger in here. And then, of course, if I would have went to the NASDAQ, this drop here, I may have felt comfortable getting into here. But this, there's nothing personally I felt confident in, right? And then given all the other factors of a potential likelihood of a reversal, the early on lack of clarity between what the bonds and yields were going to do at that given moment, and then obviously the DXY kind of stalling out inside this order block, right? Inside of a higher time frame PD array after a large range day, right? That's another very simple rule. After a large range day, do not anticipate price continuing to run so quickly. Anticipate a retracement, right? ICT has taught that multiple times, and that's what we went in today thinking, right? But obviously, NASDAQ and the S&P especially, had different opinions, right? But I hope the conversation about seasonal tendencies, the example we saw, even up until this very moment, the influence that seasonal tendencies have, the overall thoughts of what we were watching, right? How it didn't play out, right? And then obviously what did play out. I hope all that stuff makes sense. Do you guys have any specific questions? Oh yeah, and we did mention this. And we did mention the fact that when price pulled back into this, that it would likely present an opportunity. Unfortunately, we flipped back to the chart here when it did this a little bit late, so price was already down here. Because that's the case, I don't chase price. So we ended up missing that one as well. Yeah, I hope everything makes sense, you guys. Maybe we can get some type of move to take place. If DXY continues to tank here, again, we still have the potential, given the fact that the higher time frame PD array is being met, right? We still have the opportunity for a reversal to take place. We also have a monthly order block here as well. Make sure that we put that on our chart. Because once price gets down into there, that may be a time when things have an aggressive turn. So yeah, keep your eyes on possible reasons for price to want to give that reversal signature, right? It may do it, it may not, right? But there's a regular trading hours gap up here that's fairly large, if I'm not mistaken. Let me see. It's not much. Yeah, it's not much. It's kind of, what is it? Basically here to here. So that's the regular trading hours gap. Right, so we still have a little bit of a regular trading hours gap. Right. Obviously we have London's high also. We also have all of this. I don't think this will be attacked. Yeah, because we're so aggressive to the downside, there's nothing to trust in terms of getting back in line because it's a falling knife, right? And that falling knife, if DXY, especially since DXY is falling like this, at any given moment we can get the Thursday reversal to kick in and the price pulls back against it, right? Catching anybody trying to chase price. Right, so yeah. So let's see what else going on here. We got this order block here too. Nice. See how London's low was taken. Got this order block. See, I'm curious to see what takes place. We got so much layered liquidity here. It's been such a large range couple of days. So again, I'm very much anticipating some type of aggressive turn, because this just looks very, very perfect. And the timing wise, in terms of the day of the week, the fact that things have been so aggressively one-sided. I mean, it just seems like, based on the last, 4.5 years, they don't like to leave this. Again, something I mentioned earlier, go watch ICT's purge and revert logic, like the video. This here, if you keep a mental snapshot of this or screenshot it, put it in your journal, you go to that video, you'll see this taking place. And the whole idea that we discussed today in terms of the higher time frame PD array and the chance of it reversing, the day of the week, and large range day that occurred previously, or previous couple days, you'll see him conversate about this and see the mindset that he tries to place in your mind, right? Yeah, everything that we basically discussed today pretty much touches on that. He also mentions, like, for another liquidity targeting assistance. Of course, I've mentioned previous days highs and lows, previous week's highs and lows, London high and London low, right? But if you just look at the previous, you keep those in mind and you look at the previous 3 days highs and lows, especially in something like this, that's another easy way to navigate liquidity targeting. Aside from, obviously, like the higher time frame narrative, right? Like a higher time frame PD array, for example. A lot of times the previous 3 days highs and lows, or previous days high and low, and everything that I mentioned, a lot of times those will be targeted before a higher time frame PD array is attacked, or on price's way to that higher time frame PD array, right? So just something to throw into your notes. All right, let's see how this responds. Let's go look and see if anything has changed. Oh yeah, there's a huge cracking correlation here. The Dow is just raging higher. I didn't even notice that. So yeah, this is pretty intense. It's literally doing the complete opposite. So that is a large cracking correlation, dramatic cracking correlation. That's just another reason why it's like you need to be patient. You need to not push, because there's not as many high probability signatures as we generally like to see. And those of you that have been on this, or watching my content, or just being a part of my community for anywhere like 3 or 4 months to a couple years, you notice that when things are in alignment the way we like to see, we're almost unstoppable, right? But that skill set, being able to be in front of things properly, also requires you to know when things are not promoting that type of scenario, right? And a humongous cracking correlation like that is one of those factors, alongside obviously multiple intermarket relationships not agreeing, especially if it's the bonds and yields, right? But yeah, see what I mean, right? We still have the potential for this to be a Thursday reversal, right? So we may now get to finally see the upper range targets getting attacked, because they've dramatically dug into sell side. We got this order block here. We have the low of the fair value gap. So let's see how those things get treated. If they get respected and we go higher, this should be a breakaway gap down here. It should not even get back to there if it is going to be something that does expand aggressively. Let's see if the Thursday reversal kicks in. So you got to think too, like many people are probably thinking, oh my gosh, I'm really missing out now. So there's probably a tremendous amount of people trying to dogpile on to the possibility of price continuing to really ramp lower. In the context of a Thursday possible reversal. DXY is tanking. The Dow's kind of showing that it may want to continue. The bonds seem like they have somewhat of an interest to have some strength. So yeah, we'll see. So yeah, study how that scenario takes place or not. So yeah, the next macro is 750 to 810. And so we may see something take place before that. It looks like we may be in line for this to obviously give that reversal. This can also be looked at as a possible market maker buy model. Consolidation, accumulation, reaccumulation, smart money reversal, right? First stage distribution. Second stage distribution would be over here somewhere, potentially, if that's what takes place. And then terminus would be up here above the highs in the regular trading hours gap, potentially. So, yeah. I appreciate y'all staying on for so long, right? Really appreciate you guys hanging out with me. And again, I hope you guys get a lot of value from the things that we discuss. And you know, I couldn't resist. I couldn't resist. I had to take one. Just one. Live account. For the record. Yeah, I really like the idea that we're finally kicking back inside of the Thursday reversal. I like the potential for that, given the fact that DXY is so aggressively selling off, given the fact that the Dow is promoting heavy strength, And given the fact that we see such a deep dig lower to now see price really ramp up from those lows, basically having an S&T at the lows as well. Does this change the overall narrative that has changed from bullish to bearish overall? No. This is just back into the context of what we were talking about earlier. Possibility for a Thursday reversal, given the huge drop and the fulfillment of a higher time frame PD array to the downside, which generally can promote retracements, especially if it's getting attacked on a Thursday or Friday. And then you add on SMT, so on and so forth. We also add on the fact that we can pretty much very vividly see a beautiful market maker buy model framework here, right? That being this, okay, as an accumulation. All right, second stage accumulation. Consolidation. So first stage accumulation, second stage accumulation. That's justified for me because we see this response from this little zone that's created. Now we have the second stage distribution up here. And if we do get up here, it should be a fast, sudden move to get us up into this regular trading hours gap. If this is going to be a market maker buy model, and this is in fact the second stage distribution, right? You can see the first stage distribution, how price used it as a building block for this move higher off this low, off the heels of SMT, off the heels of that higher time frame PD array. Okay, you can see how it reversed, shifted market structure after taking sell side. Never really returned to a fair value gap for you to enter. I just use my experience off this one, right? Right. I just saw it happening. I was like, you know what? I see that this is taking place. Shift in market structure. Let me just get into there. Trusting the narrative we painted from the start. Seeing DXY tank. And even, like, the target was just here, right? It was just a very small, I think like 25 points. One and done, right? I don't need it to come all the way up here. It can be totally wrong and turn around. I already got in and got what I wanted. And we waited this long just to get 25 points. But, sometimes it be that way. And it's okay. But the thing is, if you don't know exactly what you're looking for, right? If you're not able to identify certain tools, right? Makes it a little bit difficult and it keeps you anxious. The more organized you are, the more you trust yourself to follow the rules you put into your trading, the better your trading becomes, right? And I hope that that type of perspective is showcased here with your guys' time with me, because I definitely do my best to lead by example. Don't want nobody over trading. I don't want nobody blowing their freaking accounts, destroying their mindset for no reason or for any reason. I just want to see everybody win, right? So remember what I just mentioned. The second stage distribution level is in here. Okay, so we should at some point from this area here, if we are going to then target this buy side up here on its way to that daily fair value gap I pointed out, this should present us with something very quick to the upside, busting through like a train. But we'll see if that continues, if DXY can be so gracious enough to send us to the sell side. Right, so we got a run on stops here, also equal highs, right? But we have a run on stops, hard rejection, right? Stops to stops. Okay, fair value gap. We're staying below those. Bullish order blocks are not being respected. Seems that price wants to continue to drop. Okay. And yeah. So yeah, it just seems like it's gonna, maybe it stays inside this range that's been created, or maybe it wants to come all the way down there. Regardless, the framework for this to retrace just goes back to what we've discussed from the very beginning. The possibility for Thursday reversal, when price is very excited one direction, anticipate the next day for price to reverse on you, to go back on people, to further position smart money with the higher time frame narrative, just at a better position, triggering in, for example, buy side traders or buy side liquidity to pair their orders with smart money sells. Being the fact that it's Thursday within the weekly range, it's a highly probable thing when a higher time frame PD array is met to the downside going into a Thursday or Friday off the heels of a very one-sided directional move. And that seems at this moment to be coming to fruition. Even though price dug lower to take people out one last time before it chose to turn around and look to possibly get us up into here. Or before it gets up into there, it could attack the AM session high that's been created. We can easily come all the way back to there. But then we also have London's high, which is up here. Right? So this is also possibilities. Right? Before it gets to there, we have this as a possibility. Before it gets to here, we can even, if you would have taken an entry down here, right? Even if you waited for this, right? Could have taken this up to maybe this order block. That could have been a possible targeting strategy. You could potentially, if we see this thing run aggressively, which I feel like it can get up into here. Because ideally, that's what we want to see, because you buy low, sell high, right? Well, above highs generally can be classified as a premium. Like in this case, from this point in price, anything above it is a premium, technically, right? Technically, right? Because it's a higher price than where price is currently at, right? Obviously, there's more depths we can get into a premium discount or whatever, but keeping it very simple, you could even take from this high to that low, measure out equilibrium, right? You could have targeted from this entry to equilibrium, or like I did, target from this entry to this fair value gap, not even requiring price to come all the way up here, right? But you could, if things continue, you could get even more accurate possibilities for targeting using, this low to this high. Once it's broken, put it from this low to that high, measure things out. Or you could just do what I did before I even labeled that thing. Look at London's high. Look at the AM session's high. Look at the next PD array that's above a premium or above the equilibrium price level, which is this order block or breaker, right? Whatever you want to classify this as. Because these consecutive up candles is technically an order block, probably on like a 5, 6, 7 minute time frame. But on this 1 minute time frame, you could see that it pretty much looks like a breaker. Kind of sloppy, but nonetheless. Right? So you could use that as a target. This high here could be a target. Right? That's the beautiful thing about NASDAQ is you can get in, have very, very minimal target, like structurally, and you'll be fine. Right? Like the move that I just pointed out to you guys. We're at 72 points, actually. I didn't even realize it went that far. $61. Okay, it went 61. Damn, what did I say? I said 25 earlier. That's insane. I didn't even realize it went that far. But yeah, you could just catch little pieces of moves eventually in NASDAQ and, be able to really prosper. But of course, to be safe, you have to know obviously what the hell's going on, and ultimately got to have the rules or something similar to the rules that we discussed today, and a willingness mindset wise to follow those rules and know why you're following them. Identify your problems, and then start adding rules to fix them. Right? If you don't do that, like I said earlier, you open yourself up to unlimited pain, unlimited possibilities, but unlimited pain, the possibility for that to occur, man, it's vicious. It's heart-wrenching, really. I know how it was when I first started. It was really, really rough. But not once did I think I was going to quit. Not once did I think, I can't do this. Because it was either this or nothing and be broke and have a miserable life. So in me, that's what pushed me. It's like desperation. Controlled desperation, obviously. And then obviously matured over time with it to what you see now. But, see, I watched these consecutive down candles here. All right, remember what I said earlier about continuation variations of a model, right? If you have like the seconds chart, if you go down to like the 30-second chart or the 20-second chart or whatever second charts, if you go down into this fractal here, you'll see that liquidity was probably taken inside the context of this market maker buy model on this 1 minute. This here may have somewhere in here on the seconds chart presented a YouTube model to buy. Right? Inside of the context of the possible market maker buy model, using a Thursday reversal profile to make sense of the move. Inside of the higher time frame bearish narrative, looking for price to push higher to a near-term premium, to set up in a particular area above, which is up here at these highs, which is ultimately below a daily fair value gap above price, which is where stops are at from the week, from the large sells, including today, which smart money will likely use to then position or pair their sell orders with a buy-side liquidity, right? Understanding that dynamic in terms of how price or how smart money weaponizes liquidity and their order pairing is a very important thing, because it just helps you make sense of things, and then over time you gain experience having the right perspective, like what we've discussed today in many, many different facets today. I think this was a really good call. You end up getting the edge, and you just continuously build yourself, and then you start getting more familiar with the scenarios, and then build muscle memory, and then you start building your confidence. And if you manage your risk, you'll continue to build confidence even through hard, more difficult times. And then eventually, you pop out. And then you'll start to see the progression. If you guys don't do this also, I highly recommend you do. You should record your video, like your screens when you're trading, as well as the audio. Because if you don't do this, it's great to just do normal journaling and like either in Discord or whatever you use. But there's nothing like video recording and listening to yourself talk to yourself. I know it sounds weird, but looking at a still image is not as descriptive as it could be. You know what I mean? When you're being able to talk to yourself, hear the inner dialogue, and think out loud when you're doing it. No one else is watching you. You don't have to put it public or show anybody. It's for you. And then when you look back on it 5, 10, 15 years later, or even 3 or 4 years later, you will be astonished at the person you were and the way you used to think. You may not think that'll be something important now, but I guarantee you, if you do become successful, you're going to want to look back and see those moments where it was so difficult and where you felt like quitting at some point, because many do, when you felt like it was so confusing, and then compare it to the time, when you start hitting milestones, and it'll be a very humbling experience. Because it's surprising how rapidly things change, and how obvious some things are that are just sitting in front of us. It's like magic. Just like all of a sudden, it's just things become clear. But yeah. Right, so definitely take journaling serious, and consider buying like a 10 terabyte hard drive and just screen record everything using Zoom. Have a little mic or headphones, whatever you want to use, and just, spend that time on yourself and invest in your learning that way as well. Very, very helpful. Right? And it's also something that helps you track your progress too, right? So it's got multiple reasons why it's important. But yeah, so again, like we said, we're watching this order block here. All right, we still got equal lows down here that look juicy. We have filled in the rest of this fair value gap, and now we see kind of a response away. So that's kind of interesting. Yeah, I'm still of the opinion that this is going to probably continue to tank. Right. But again, does that change any of the overall narrative? Absolutely not. The quarterly shift has proven that it wanted to change to bearish. It went bullish for the first part of the quarter, from June 16th till, I believe, early July. And then all of a sudden, things topped out, presented an SMT. Pull that up so you can see. So there's SMT here at the highs here, like I have mentioned. And it was like early to mid-July. And then now, just in like a week or so, prices topped off and dropped very aggressively off the heels of, for one, seasonality, and then obviously two, news events that impact the tech sector in America negatively, related to China, supply chains, and a bunch of other techie situations. I think some missed earnings too. I think Tesla is also down like 12% or some craziness. But yeah, right. So all of that has led to us changing the narrative. All of that added on to the fact that this basically broke market structure. Right, went from stops to stops aggressively. If it was going to continue, it would have likely went back into the fair value gap, right, and then went up and continued to attack the highs. But it has not done that. So this just, again, justifies. We also have this breaker that I painted, right, before the fact. So if we stay below that, if we break down below this, I'm very confident that we're going to continue. And obviously that's what took place. And now that we, again, have hit a higher time frame PD array, it's not unreasonable for us to want to retrace. That's the whole narrative of what I wanted to see today. Because it's a Thursday, because we pushed into this day. That's what I wanted to see. I wanted to see us pull back a little sooner than we did, but they just decided to dig lower one more time and really punish people a little bit more. And then DXY has turned, and then we're seeing the reverberations through these assets. Right? There was a pretty massive crack in correlation between the Dow and the other indices, well, they had a pretty savage crack. Okay, so that has come home to roost. Okay, it's gonna kick these back in line. Both of these became the Six Sisters, opposed to the Dow. Right, so things have rebounded. That opportunity here that I painted, I said that'll probably hold inside the market maker buy model. That has played out. Right, similarly to what I pointed out earlier. Right, so if you trusted the overall analysis here, there was a beautiful chance. I said this should hold. Right, so again, this is a market maker buy framework, market maker buy model framework. Consolidation, first stage accumulation, second stage accumulation. How do you know that that's the case? Because if you take this range from this low to that high, drag it over, you can see how price is respecting that. It's also respecting the fair value gap here on the higher time frame. Right? Price ran up. Maybe you wanted to wait for this to shift before you felt confident. Right? Well, there's a fair value gap. So price retraced back down. Right? Punched higher, came back down, hit this. We're respecting the midpoint of the wick. See that? Respecting most of the wicks, right? Notice how this candle here closes, or both these candles close above the midpoint of this wick, also in conjunction with the daily fair value gap here, the low. Price ran up aggressively, price came lower with this wick into the fair value gap. Notice how each candle consecutively respected the midpoint of the wick, and it continued. That's a signature in price, visually showing you the institutional order flow at the time. Right, then price drops down again, kind of breaks through a couple of them, but guess what? The largest wick of them all, midpoint, respected to the tick. Here. Inversion fair value gap also. Right? Prices rallied up, comes back down to the order block like I mentioned. Right? I said go in there, you'll probably find a YouTube model in there. Right? But nonetheless, price came back into it for this time frame, held it, now offered another pretty decent move in the context of this being a market maker buy model, in the further context of today presenting us potentially with the Thursday reversal, right? So pretty much everything we've mentioned has had validity. The only thing that was a little shaky about today was the price delivery from 5:30 to 7 o'clock a.m. Pacific Standard Time. Price did choose to do a lot of nonsense shenanigans, not allowing price to really offer much to either side. But then obviously the overall perspective and thought came to fruition. Remember what I said, if it uses this and this is going to be a valid market maker buy model, we should quickly get away from this range. It shouldn't spend a lot of time here. Right? See, we should be able to see that take place, right? So this here, right? It's also big fair value gap on the daily. So remember what I said, this should be a fast move. What is it doing? Created a fast move. Should use this as an order block and continue. Shouldn't have much of a retracement in here. So it has punched through. We see DXY tanking. Yeah, again, it should be pretty fast. Should be able to get us up there. So yeah, DXY is still tanking. So let's see if that continues. So we do see that the NASDAQ has failed thus far to be able to have the strength to get up above there versus the S&P. So we'll see if all of this continues. I'm assuming that it will, but we'll see. I like the context of the market maker buy model. And it seems like all is well inside that assumption. Same framework for the NASDAQ here. Should be a quick move outside. Possibly attack London's high. All right, but we'll see. Yeah. Driving to work, taking in everything you say. See me join the team later tonight or in the morning. Beautiful, bro. I appreciate you and your attendance. I appreciate your interest, and most importantly, I appreciate you guys' trust and willingness to come and just, hang out with us. Because out of all the people on the internet, you're choosing to spend time with me and this community. And we don't have, I don't have the most followers, right? I don't have all the flashy nonsense that most people try to do. Because we're out here trying to actually make a change and be the change we want to see in this industry. And that requires you not to be some arrogant piece of crap, to be so honest. And, so I appreciate you guys and your interest and your attendance, and most importantly, I appreciate and am inspired by your guys' dedication to your own grind. So I try to do my part to be some kind of asset to you guys. You feel me? I appreciate you, Maddie. I appreciate you. I hope it's gonna be one of the best decisions you make. Cause man, we try to make this as powerful as possible. I appreciate you saying that, Maddie, for sure. But yeah, so I hope you guys have, again, got value as always. I think we'll probably call it a day, as we generally do towards this time. I hope that you guys have had a very eventful week so far. I hope you got a lot from this video. If you guys have any questions, we found, how many trades we found? We found basically 2 profitable trades, and there was 2 questionable trades that were outside of our rules. But yeah, we found multiple trades, that's for sure, and navigated the conditions which is the most important part, right? But yeah, so again, I hope you guys got value. Epic Monkey, I highly suggest you go back and watch from the start, like run the replay and go see a lot of the things that were discussed, and you'll see the trade opportunities and some of the ones that we basically tossed out, didn't even participate in, and why, and then why the other two that were profitable ended up being profitable, because there's a lot to learn in a lot of the discussions we had. But yeah, so I hope you guys got value as always, and we'll go live 2 times next week. If you guys got any questions, concerns, anything, let me know in the comments. And I truly, again, appreciate you guys' time here and your interest and dedication into becoming a profitable trader. All right, so with that being said, you guys, God bless y'all, and I will see y'all next time. Take care.